Well, while the stock market has been moving lower for quite some time, we've actually had a few areas of the market that have been pretty strong. And I want to show you what they are, how to find them, and how you can take advantage of them. Of course, I'll do my analysis of the markets, figure out if this stock market crash and weakness is about to end soon. There's some interesting things that could come into play next week. And then finally, I'm going to show you a stock that went up considerably, over 200% in just a few days. And there were some very simple techniques to find it. I'll show you those as well. That's all coming up in this week's Stockscores Market Minutes. All right, well, the market's been moving down since at least the start of September, maybe late August. And the question, of course, is when will it all end? Well, we'll get to that in a moment. And plus, I'm going to show you a stock that made huge gains this past week and was pretty simple to find, actually. I'll show you how I did that as well. But first, I want to talk about the areas of the market that have been showing some strength. We've seen good strength in the cannabis sector as the market was speculating on whether the American companies would be allowed to have banking facilities. Up until now, you can only accept cash for cannabis, so that was a thing driving the market the last couple of weeks. And then, of course, there's been really good strength in uranium stocks. And then, of course, the hottest sector of the market has been the energy sector, driven by the oil stocks. Oil prices have been moving up. We've been talking about that here for a while. Well, the one thing that all of those stocks have in common is that many of them are listed on the Canadian stock market. The cannabis stocks started off being listed in the Canadian market because cannabis was legalized in Canada, and so they could list there. And then there's a lot of mining stocks on the Toronto Stock Exchange as well. And of course, uranium is a mining stock. And so we've seen lots of those stocks do really well. And there's a whole bunch of energy stocks on the Canadian market. So what I thought I would do this week is show you how I do market scans on Stockscores.com to find stocks that have good potential for position trades. Now, later in the video, I'm going to show you a swing trade. Let's talk about the difference between the two. Position trades are held for a few weeks, maybe months, whereas a swing trade is held for a few days or perhaps a week or two. So just different time frames. But we can use the same techniques to pinpoint which stocks are worth considering. So let's jump over to the Stockscores website right now and run a market scan where we look for stocks on the Toronto Stock Exchange that have a sentiment stock score of at least 60 and have at least 100 or 300 trades a day. So not super active by the standards of the US stock market, but for Canadian stocks, that's okay. And then we're going to look at the charts to see if any of them have good patterns. So I've jumped into the Canadian market. There's the uranium ETF. You can see that those gains there have been considerable. And then MSOS is an ETF for cannabis, and you can see the last 5 weeks they've been moving up, although still really in a long-term downward trend. And then, of course, you have oil, which we've talked about for a few months here because it's been on a good move higher lately. But let's go to the market scan and build that scan I talked about. We're going to search on the Toronto Stock Exchange, and we're going to look for any stock that has a sentiment stock score, which is right here, that is at least 60. And that means basically that the chart is favorable, that there is optimism in the chart. We have an algorithm that combines about a dozen different factors to come up with that. I'm going to look for stocks over $1 and at least 300 trades on Friday and run the market scan, and it found 81 stocks. Now, we're not going to go through all 81. We'll look at the cheaper stocks and we'll see if there's anything interesting, and then if we need to, we'll just keep looking. All right. So here we have the first one is a uranium stock. Now this is a weekly chart. I want everyone to note that. So this is the longer term time frame. The problem I have with uranium is it's been going up for a couple of months now. Really, the buy signal was right there when the downward trend line was broken. You had a little rising bottom and you broke resistance at the downward trend line. And so when we see these uranium stocks come up, we're going to find a lot of examples like that. Denison Mines is also a uranium miner. Again, I draw a line across the tops and I see that that line was broken from a rising bottom. That was around $1.80, $1.90. Now it's at $2.20. So it's made some decent gains, but nothing to get all that excited about. what I'm looking for are stocks that are just starting to move. So here's an example of one, In Play Oil. And you can see that the downward trend line here was broken recently. We've built a rising bottom, and now this week we started to make some gains and the volume is picking up. It's got a pretty good dividend yield, 6.34%. That looks like a decent chart. It had a great run back here and it kind of quieted down for a little while, but you have to think with oil prices where they are and really in an upward trend, and also the US dollar moving up, that's really helping these Canadian oil stocks in multiple ways. Here's another one, Saturn Oil and Gas. This one broke its downward trend line a couple months ago. Hasn't gone up a lot yet. This is starting to build upward momentum. I think this is a little farther along than the last one, IPO. And so I think IPO is maybe a better candidate because you're getting in a little earlier. Really, this one should have been bought back there. It's still worth considering because it hasn't gone up a lot yet. Okay, here's an Ensign Energy. This one is not through resistance, so we don't want to do that. This one's already taken off. It's too late. Here's another one in the uranium sector. You can see 2 months ago it broke. So it's a very useful tool. By looking for stocks with the sentiment stock score of at least 60, what we're doing is we're finding stocks that are just starting to build upward momentum. So as an example, here you can see the 60 point, and it crossed above 60 right here. All right. And it's been above 60 essentially since early July. Well, since early July, the stock's been moving up quite nicely. Now I'm going to do some live presentations in a little over a week where I'll explain how all of this works and I'll show you more about how to read charts. I'm going to give you some information in a moment on how you can register for those. They're free, but they're live events, so you can ask me questions live as opposed to just watching it here on YouTube. It'll be a live event. And again, I'll show you that in just a moment. Here's Baytex. I like this. It's recently broken the downward trend line. And like that first one, In Play Oil, Baytex is starting to move up. You can see the volume is growing, so the stock's under some accumulation. Not quite as good of a yield, only 1.54%, but it does look like it's turning around. I think this one probably rises to $8, maybe $9 in the months ahead, as long as oil continues to be strong. Here's one that is sort of what we want in these oil stocks now. This did it back in April. So that's when it broke. So a lot of those oil stocks that I've shown so far did this or are doing this now. And so this is what we hope to see out of those oil stocks, is that they start this upward trend. They break the downward trend line, they build rising bottoms, they break up from a rising bottom, and that usually sends them up. Now, this particular company is coming into resistance at $8. It's a little over 7 now. So once it gets to 8, it's probably going to get stuck. That's why I wouldn't want to buy this one here. If you're in this stock, I would hold it, but otherwise it's best just to leave it alone. All right, Cardinal Energy, another oil stock that is just starting to turn. You can see the downward trend line broken, the build of the rising bottom, starting to break through. I'd like to see this one get through 750, 760, but this has a very nice yield, 9.56%. For those of you that want to get paid to own a stock, these stocks with yields above 6%, those are worth considering. Okay, we'll look through one more page. Of course, there's 9 pages of candidates here. And this is what I do every day when I'm looking for opportunities. And again, I'll show you in a moment how you can register for these upcoming webinars to find or learn about how to use this and ask me some questions and that kind of thing. Crescent Point recently broke. The problem with Crescent Point, a little bit of resistance here, which is kind of close to where we are now. And so I think the upside is a little bit more limited. Whitecap is on the verge of breaking out. So watch this stock for a break up through 12. It's building upward momentum. Yield not bad, 5%, but it's got that upward momentum. I'd like to see volume increase a little bit and get through that $12 level. So keep an eye on that for WCP. All right, now these events that are coming up, if you want to learn more about those, just go to stockscores.com, go to Trader Training, upcoming events, cycle down the page, and there you can see the topics and the days. So the first one I'll do will be on day trading and swing trading. Actually, no, that's not the first one. The first one is just general how to read a stock chart, how to read a market chart, how to avoid crashes, how to find hot stocks. That's Saturday, next Saturday, this coming Saturday. And then if you want to learn more about day trading and swing trading, it's on Wednesday, October 11th. Investing, how to use that market scan tool like I've just shown you. That's what I will cover here on Thursday. And then if you want to learn how to use our tools and the education that we offer, you can go to the Saturday webinar. These are all free to attend, they're live, and you can ask me questions in real time. All right, well, let's get into this week's market analysis now. I'm going to jump back to the Stockscores website, and let's start with the chart of SPY. And this is that longer term analysis. Later in the video, I'm going to show you how I found a stock using basic techniques that went up a few 100% in just a few days. But for now, let's analyze the overall market because that's weighing on most stocks. And you can see that we had a falling top here and a breakdown from a falling top. And what's happened now is the market is working its way back to this upward trend line. Anytime price runs away from the trend line, it usually comes back to the trend line. It's just a very basic rule of chart analysis. And so we're working our way back. I think one more week of weakness and we should bounce off of that trend line. Now you could say, sometimes trend lines is a bit of an art. I could also draw the trend line just across these bottoms like that. And in that case, we're even closer to the trend line. So although the weakness has been a little bit hard to swallow through this late summer and fall, it's probably going to end soon because we are making our way back to that trend line. I think a lot of it hinges on whether there is a spending bill in the US. Of course, that's what investors have been waiting for. We'll see if that happens next week. Here's the short-term chart of the S&P. You can see that the trend is down, and I'm looking for this downward trend line to be broken from a rising bottom. So we've got the rising bottom. Monday, Tuesday next week, we could break this, and then I want you to start to look at stocks again. Until then, be pretty cautious. What about the NASDAQ market? QQQ is the symbol. Here's your upward trend line. And we built the falling top. We're working our way back to the trend line, and much like the S&P, one or two more down weeks and we're going to bottom out. Now remember, the market tends to have its worst month in in September, and then bounces back in October. So we are at the point where we should bounce back. What are we looking for as a sign? Well, we need to see a trend line broken. And on the NASDAQ, we broke this downward trend line on Friday. This is the 2-hour chart going back a month, but we couldn't hold it. So we still need to do a little bit more. We'll keep a close eye on that next week. Small cap stocks in the US look quite a bit different. Here's the long-term chart. They've had weakness as well through August and September, but closer more to a horizontal support or even an upward trend line of support. That's where they're at right now. I think we see these small cap stocks bounce back next week, maybe the following week, but seasonality wise, it does look like we're going to get that October bounce. Toronto Stock Exchange looks more like the small cap market in the US. Here is your upward trend line, and we're right at it. We should hold. Here's resistance. We need to break through that. So are we going to bounce off of this? Probably, but I think this is still a market that is struggling a bit outside of those commodity stocks, like the energy sector, which has been doing well, like the uranium sector, which is doing well. Cannabis kind of cooled off at the end of last week, so I'm going to hold off on those right now. Here's the short-term trend on the Canadian market. Be careful with this. We have had some weakness, and until we can break through this downward trend line from a rising bottom, we should be pretty cautious with Canadian stocks. Okay, let's take a look at some commodities. Gold, GLD, big down week this week. You can see the big drop there. It shows up more on the short-term chart. So really want to avoid the gold and gold miners. How about oil? USO is the symbol. And you can see that on the weekly chart, nice upward trend for the last few months. Looking at the 1-month chart, 60-minute here, still in an upward trend, little pullback, and looks like we're going to try to resume the upward trend. I'll be concerned if we break down through this 79, 70, almost $80 level on the USO. That would be a bit of a negative, but for now, the buyers are in control because the bottoms are rising. And so that's why I think you really got to look for opportunity in those energy names. Let's take a look at the US dollar. UUP is the symbol. You can see upward trend. And that's going to help those Canadian oil producers who sell their oil based on US dollar prices. And so not only is oil going higher, but also oil or the US dollar is going higher. Take a look at Bitcoin. It is stuck in a narrow trading range on the weekly, pretty boring. It's not bad, it's just not good either. A little bit of strength at the end of the week, but we really need to get out of this sideways trading range that it's been in. Now, the most important chart, I would say right now, and really what the market is focused on most, is the bond market. And you can see that the bond market has been in a downward trend since, well, 2020 on this chart. We can go back even a little farther. And that means interest rates have been rising. Interest rates are inverse to the bond market. So if the bond market is going down, that means interest rates are going up. And you can see that interest rates hit a new high, meaning the bond market hit a new low for the last couple of years. I think we're getting a little overextended on this interest rate story, and I expect we're going to get a little bounce back, maybe not right away, could be another week or two, but that could be supportive for stocks. So keep an eye out for that, because I do think that we're at this turning point that could happen any day now, but let's wait for it to happen. And so we should trust those charts that I've shown you. So let's take a look then at my ratings. The US large cap stocks, bearish on both time frames, the same for NASDAQ. US small cap stocks, bearish in the short term, neutral in the long term, we're at some support. Same for the Canadian market, short term bearish, long term neutral. Gold, bearish on both time frames. Oil and the US dollar, pretty similar charts actually, and bullish on both time frames. Bitcoin, I've got it neutral, and interest rates, I've got at bullish. All right, well, I want to now show you a stock that did really well despite the weakness in the market. And the key to finding these stocks is to focus on alpha, the alpha characteristics. So what are those? Well, if you've been subscribed to the channel for a while, you'll know that I talk about this a lot. And if you're not subscribed, there's a good reason, because this is one of the most important lessons in the stock market, is to trade alpha. And alpha is characterized by stocks that can make gains on abnormal volume. And the stock that I'm going to show you did that, and it was the most actively traded stock on Friday. But it actually started earlier in the week. So it gave us the clues, I think on Tuesday. Let's take a look at the chart here. Here is FEMY, and you can see it started trading abnormally on the 26th of September. So that was Tuesday. It had a big gap up and traded really abnormal volume. Now, I don't really like trading stocks when they make a big gap. I want to give them some time to build a foundation. And so once they've built a foundation, once they settle into a pattern, I look for the break of a pullback, which I have here drawn in red. These are pullback lines, and it's all drawn by my computer program. So I have some indicators that I plot in TradeStation, which is the program I'm using here. And these are one of the things that I'll talk about in Wednesday's webinar. So make sure you're registered for that. I'll explain exactly how these things work and show you how to do it. And you can ask me questions then. But here is the action candle. Now, I talk about this indicator a lot. It's my own indicator. It looks for abnormal price and abnormal volume movement. And I like that indicator when it breaks through a downward trend line. So when it breaks through a downward trend line, ideally from a rising bottom, although that's not critical, we have a buy signal. So we had a buy signal on FEMY, action candle, breaking a downward trend line on a stock that had alpha, and this stock then went into an upward trend from here. Now that was just a little over $1 on Thursday, and look where it hit on Friday. 362 was the high, and if you use just a basic trend line, you might sell right in there, although I think it's still a hold if you're in it. It's risky because it's up so much, but you could easily still be in this at 325, and this may be another hot stock for next week. Well, hope that you've enjoyed this week's video. Make sure you join me for those free webinars starting Saturday, October 7th, I believe, and then the following week on the Wednesday, the Thursday, and then the following Saturday. They're all free, and I'm going to show you some real in-depth knowledge about my strategies, about my tools that I use, and you can ask me some questions about those things then. Hope you've enjoyed this week's video. If so, click the like button, subscribe to the channel, but most importantly, trade well.